Welcome to the Advisor View, brought to you by Citizen Mint. Join us as we explore the origins, business journeys, and unique insights of exceptional wealth management firms.
Hello, my name is Josh Hile, and I'm the co-founder and CEO of Citizen Mint, a platform that provides simple access to exclusive private market investments. This is our second episode of the Advisor's View podcast, where we will highlight exceptional wealth management firms, including what led them to the space, how they built their business, how they may use alternative investments in their client portfolios, and what trends they are seeing in wealth management. Our guest today is Adam Wishard, Co-Chief Investment Officer and Advisor at the First Pacific Financial, where he has worked for almost 2 decades. He's a founding member of the investment committee, the senior advisor for his team, and plays an integral role in many facets of the firm. Adam's ambitions as an advisor is to advocate for simplicity. He does this by turning complicated financial problems into understandable solutions that clients can implement with confidence. Welcome, Adam, to Advisor's View podcast.
Thanks for having me, Josh. Appreciate it.
Yeah. So what led you to be a financial advisor?
Yeah, I have a math and statistics background. So coming out of school, I wasn't sure what I was going to do. I actually kind of thought I'd go back into teaching or become a professor or something, and then just happened to stumble along a financial advisory practice, which happened to be First Pacific Financial way back when, close to 20 years ago now. But I had a much more focus on investments when I first started out. It wasn't until 5 or 6 years in that I decided to actually be an advisor and work directly with clients. I was more on the investment research, doing trades for the office, and that's kind of where my passion initially started. And then 5 or 6 years in, I decided I really wanted to be working with people and trying to help. So that's when I obtained my CFP. So it was until a few years in. And then kind of transitioned to primarily working with clients day to day.
And just out of curiosity, so how many people were at the firm when you first joined? Because that's a long time. And so it's like a big difference from where you are today.
Yeah, I think we're at 5 or 6 or so. And then a few advisors were retiring and going in different directions. So I think at one point, First Pacific, from where it is today, at over 30 people, I think it was like 3.5. And that was 2007, 2008 time period. And so much different firm way back then, but kind of hit our stream and grow in the 2010, 2012, and started to kind of have a different approach in where we're working in teams and kind of where we're at today.
Yeah. And what's your favorite part of your job? I mean, you made that transition. You kind of mentioned, working with clients as kind of a big motivator, but what is that favorite part?
Yeah, that's exactly right. I just noticed early on in my career that I didn't, as much as I love spreadsheets, I didn't want to be sitting behind a computer screen, doing spreadsheets, placing trades. I really wanted to work with people and help people. It's amazing over the years, the type of impact you can have on clients' lives, and seeing, people send their kids to college or, retire early, way earlier than they initially thought they could, or pass on wealth between generations. And there's so much areas where we're helping clients, and that's really ultimately what I want to do is serve people. Mm-hmm. So that's what I do enjoy most, and just helping people.
Mm-hmm. Yeah, no, that's great. And, wealth management, there's a lot of firms out there. So what really differentiates First Pacific from other wealth managers?
This is going to sound really funny or probably kind of dumb from anyone that's not in our industry, but I think one of the biggest differentiator is that we actually give good advice. It's kind of sad, our industry, has a history of, whether it's, stockbrokers or people just selling stuff, selling investments to end clients. And really it was all about that sort of transaction. Whereas from, basically the beginning of my career, and the approach that we've had is like I said, helping people. And we give tons of advice over the years that isn't, it definitely affects the way that we're compensated, whether it's recommending clients gift away significant portion of their wealth to charities or onto the next generation. Whether it's, hey, I think with this huge amount of money that you're getting from selling a business, I don't think it makes sense to invest all that. I think it makes sense to maybe buy rentals or have a real estate portfolio that it's not just all about the assets under management or anything like that. And so that, I'd say, is very hard to market. And why most of our new business and growth over the years is from referrals. And you can't say, do an advertisement on TV and say, hey, we give good advice, you should come to us. That's quite cheesy. I'd say the other thing that differentiates us is this team approach that is really ultimately best for clients, and not having just a single point of contact that they're looking to for advice, and having that kind of financial partnership, but also, a whole team to lean on, and then on the flip side, that also is what provides a career path for an industry that's really hard to get into. And for some of those younger advisors that are either just out of school or making a career change, they don't have to go out and, from day one be 99% business development and trying to bring on, their aunts and uncles and grandparents as clients. They can actually learn the craft of financial planning and work in that team approach. And ultimately, yes, they might eventually bring on their own clients and all that, but have a career path for advisors. And then also the other teams within the firm. We've got a client service team and an investment team that I think is a little bit unique in our industry. I think we're at the scale now where we can really do a great job for clients, but on the flip side, also have a really awesome place to work, and where advisors want to, start their careers or transition their careers too.
Yeah, no, and I think that's really important, especially on the advice side, because, I obviously talk to a lot of advisors, and, having that kind of fiduciary standard of what is in the best interest of clients, but also understanding what you're doing from a recommendation standpoint, because I hear a lot of things where advisors would tell me something, I'm like, well, that's not actually accurate. I mean, I work as a large wealth manager, and I hear these things, I'm like, well, no, that's not true. And so there is, unfortunately, just some bad advice out there, or advisors working towards their own goals rather than the client's goals, which is ultimately what matters.
Absolutely. Yeah, it is kind of unfortunate, but it's also just takes experience. And even being in the industry this long, I'm learning new things every day. And the nice thing is there's resources when you have a firm our size that you can go to, and an advisor that, oh, hey, have you dealt with this type of situation before? Yeah.
How have you seen the financial advising space kind of evolve over the last decade?
Yeah, I think the biggest thing that I've seen is just the services that we give to clients just keeps growing, and I think it's going to continue to grow in a good way. Where I think there are still firms out there or advisors out there that are just primarily giving investment advice and managing a portfolio, but over time we've definitely prioritized financial planning, whether it's estate or tax planning, and really looking at that whole picture is one thing. But above and beyond that, we're seeing clients need help with digital protection and privacy, and areas that we maybe didn't necessarily know that we'd be going down or didn't initially get educated in to become a financial advisor. Real estate transactions, complicated business, succession planning. And then one of the things that comes up very often is just almost like counseling. Being, money is so emotional for people, and there's a lot of behavioral finance that goes into just working with a couple and helping them, unify their goals and be able to have a venue for them to talk about money, which sometimes may not happen in people's busy lives. So I think that service list of what we do for clients is just going to continue to grow. But I think that's the biggest thing that I've seen over the last 10 years is, with technology's help, the ability to kind of leverage our FaceTime with clients and continue to do what's needed, and kind of exciting too, to know or to not know what's going to come next.
Yeah.
What areas we're going to continue to help clients with.
Yeah. And I think that's a great point. I think you can't because, wealth management firms traditionally is like, hey, we did investments, we do financial planning. But I think, it comes down to this comprehensive wealth management and, taking all that into one bucket, especially as you move upstream and you're helping these clients with more significant wealth. They expect you to be there for kind of all financial aspects of their life and how they're going to plan it out, whether it's charitable giving or estate planning or whatever it might be. And really for you to be that kind of quarterback for them. How do you see your business evolving over the next few years?
I think this is really an extension of my previous answer, and kind of starting to, we're already leveraging technology. I still remember the days of placing trades by hand and typing in dollar amounts for placing trades, or doing data entry into financial planning software. But there's just artificial intelligence is definitely coming in our industry. We've got programs that will read tax returns and fill out all the tax information from every box on a tax return, to programs that will read estate plans, complicated wills and trusts, and give us a clear picture and a diagram of here's what the beneficiary looks like based on AI's read of what the will says, and who's the key players, the executors, and all that allows us to really do more and more for clients. And maybe this is also just something that we probably take for granted after the pandemic, but we were starting to use Zoom quite a bit in late 2018, 2019. And so the fact that we actually we helped an advisor retire up in Juneau, Alaska during the pandemic, just doing complete virtual meetings and getting to know these clients, doing joint meetings with that retiring advisor. I mean, that 10 years ago wasn't even possible.
Yeah.
So to kind of think 5-10 years from now, where that's going to take us, are we going to be, basically with VR in the same room as them, giving advice all over the world. We've got clients that do plenty of travel internationally, and we're trying to coordinate time zones to have a meeting and do their regular review when they're across the world, which is pretty neat. So I'd say technology is exciting to me, and it's amazing how much science fiction is just becoming reality.
Yeah, no, definitely. Yeah. And I think that technology will continue to play a role in kind of your communication styles with your clients. And especially as people are busy, especially as the world is becoming more borderless. And so clients aren't going to necessarily be living right next to your firm, but could be anywhere. And you're also going to get those referrals that might be their friends from the new place they're living. So that's great for your business. So discuss your views on alternative investments and how you kind of think about them, how you incorporate them into the portfolios, where it makes sense, where it doesn't make sense for your clients.
Yeah, for us, I think there's definitely some that may view alternative investments as a return enhancer, or a way to get returns above and beyond the public markets. But we really see those types of investments as value for their lack of correlation to the public markets, and really a diversifier. I think especially for clients that have super long time horizons, or maybe we're talking about multi-generational wealth, where they're selling a business or they're deleveraging out of real estate, and we don't want to just put everything in public stocks or stocks and bonds. I think that's a great use for alternative investments, and we kind of more reference them as private assets. It's kind of one and the same, but I do think there's a distinction there, because alternative investments these days can mean anything.
True.
So that's really what we're referencing when we think about alternative investments, is really just that private asset pool that brings a diversified, different type of asset that's going to have some lack of correlation with the rest of their stock and bond portfolio.
Yeah. Yeah. And I think it goes to a little bit of behavioral issues that clients experience and how you're trying to reduce those over time. Like you can create some diversifiers in their portfolio, maybe like reduce potentially volatility within their portfolio. Like from a mental standpoint, it does help clients to stay invested, to know that their portfolio is secure, and just like reducing that volatility can help from a behavioral standpoint. And what solutions, I guess, like we've been kind of thinking about this from a firm level, Citizen Mint, and like thinking about client solutions. What solutions do you hear clients asking about, whether like tax savings, income, reduced volatility, growth? Like, what are you hearing from clients?
Yeah, I know that's probably primarily an investment question, but I think the answer that any wealth advisor would probably or should tell you is tax planning. I think that's just front and center for our clients, and I think there's plenty of industry studies that are starting to see that tax planning, tax efficiency, and within the portfolio is becoming just as important, if not more important, than retirement planning or some of the other areas that we were helping clients with. So whether it's tax strategies related to their portfolio, doing exchanges and from real estate into DSTs, for example, I think the other issue I think with that is that CPAs, and I think I'm talking to a recovering CPA. Josh, don't you have your CPA?
Yes, I do.
Okay. Yeah, I think there's not a lot of young people going into the tax prep or tax planning profession. And I think, you're seeing, just like you're seeing advisors retire left and right, you're seeing CPA firms sell their business or decide to retire without much of a plan in place. And so that's leaving a lot of that good tax planning and looking at, what's this year's tax going to look like? What's tax going to look like 5 years from now, 10 years from now? What's it going to look like for my heirs? They're not getting any of that from their tax preparer. So we're needing to fill that role. Absolutely.
That is such a key point, and I just want to highlight that because of how busy these CPAs are at this current point in time, it's kind of just keeping up with what they're essentially told to do. So it's like, hey, we need you to figure this out, but it's not the extra work of being like, hey, here's the tax strategy you should actually implement over the next 5 years for you to like save a ton of money on taxes. That's just like not coming into the conversation because they're so busy and because they just don't have time to work individually with each client on that unless you're like massive and really requiring that. But I think that can be such a huge benefit for you on the other side of it to think about these tax planning situations and really become the advocate. And there's even, I think what clients are now experiencing and what they'll continue to experience while interest rates are high is they're paying a lot more taxes on that side of the portfolio. And they didn't really realize it, think about it. And even though it's great, we're getting higher rates and you're getting more income in your portfolio, you are starting to move up tax brackets. You are starting to pay a lot more taxes out of your portfolio every single year just to catch up with that.
Yeah, that's 100% right. Being able to be proactive, and it's just not something that a tax preparer is going to be able to, check in with a client mid-year and say, hey, have you had any big events, or have you, sold anything in your portfolio that is going to produce a large capital gain, warranting a change in your estimated payments. I mean, it's something that I think we can definitely step in and help, either in collaboration with their tax preparer or do on our own to be a little bit more proactive. And then there's other strategies like your recent opportunity zone. I mean, there's definitely things that we can look at to continue to provide a ton of value. And ultimately, over a lifetime, specifically in retirement, their biggest expense is going to be taxes.
Yeah.
So we absolutely should be trying to provide value there. And I think we do.
Yeah. No, that's great. Yeah, we're trying to always figure out new strategies and ways to utilize different investments for tax savings, and like how do we get higher income that's non-taxable, and those different opportunities that can be really impactful for clients, especially retired clients who want income but maybe don't want that big tax hit at the end of the year at the same time. What do you think advisory firms are facing challenges, just like any other industry, whether it's on the talent side, the tech cost side? What are you seeing as the biggest challenges that advisors are facing right now?
Yeah, I think the biggest thing is, when you really think about 5, 10 plus years from now, our industry is going to, I think, struggle to stay relevant to those retiring baby boomers and the services they need, while also becoming relevant or being attractive for those younger clientele that are either going to need help on their own through their own wealth creation, or when then those inheritance starts being passing down generations. I think, our firm's been around a long time and we have clients kind of all over the spectrum, but we definitely, the majority of our clients fit within that typical age range of nearing retirement or recently retired, or kind of that primary baby boomer population. And so just thinking about how our industry's been pretty slow to adopt technology. It's hard to onboard with some of the rules and regulations in place. Even just the custodians are slow to adopt what seems like pretty basic technology. And I think if we're not careful, we can just not be relevant to that next generation. And so that's something we think about a lot. And okay, is this new service we're offering really just to help the baby boomer that's trying to retire, or do we need to be thinking outside the box and maybe going into other areas that we haven't explored before? So I guess that's what keeps me up at night and making sure we're still relevant 10 years from now.
Yeah, no, that's huge. And I think there's a lot of advisors out there who are running their business as an annuity, where it's just like, hey, I got my book of business, I'm not going to really worry about growth. And then there's the next set of advisors, like in your cohort, where you're saying, okay, well, these next generation is going to want something probably a little bit different from what their parents wanted. And so how do we reposition our business to hit what they want? They're not going to want really long meetings. They're not going to probably want in-person meetings. There's just like a lot of things in there. They're going to want like possibly investments that align with their values, or other things where it's like, hey, kind of that coach mentality, as you were saying earlier, like being their financial coach. So I think that is going to change. And what excites you about the future of the financial advisory space in your specific practice?
Yeah, I've mentioned technology, and I think that's just exciting to see how, our industry continues to adopt it. I think one area that you just hit on too is thinking about that younger clientele, and whether it's aligning their investments in terms of sustainability or ESG, which we've got a lot of clients that care about those kind of issues. And I think above and beyond that is just making impact. We're in a position to really help clients make huge impact, whether it's on their own families, whether it's on the environment or the communities that they live, or the communities that we operate in too. Impact is huge. I know impact investing is a term in our industry that actually means something, but I think in some ways every dollar that you spend, every dollar that you invest is making an impact somehow. And so helping clients align their values with the impact that they want to make is hugely exciting to me.
Yeah, no, definitely. That's like can also like be to like a lot of their goals, like their impact on their grandkids through paying for college or the future college, their impact on their community through DAFs or other charitable giving. I think it can be a huge impact. So where would individuals find more information about your capabilities?
Yeah, I think one area is LinkedIn. I'm fairly active on LinkedIn, so you can search Adam Wishard, and then our website's pretty decent amount of information, but definitely don't hesitate to reach out. But fp-financial.com is a good place to start.
Great. Well, if anybody wants to find out more about Citizen Mint, what we're providing to wealth advisors, you can go to citizenmint.com, and we'll also have some info at the end of this podcast on it. But thank you so much, Adam, for your time. Really appreciate it, and excited to continue talking to you and seeing how this whole thing evolves.
Great. Thanks, Josh, and congrats on the launch of the podcast.
Thank you.